To move on now to the stock market. It's been dramatic news around the world over the past 24 hours. Business reporter Chris Kohler is in Sydney. Chris, tell us the latest of the reaction in the Australian markets. Obviously, Wall Street down, 3% overnight?
Yeah.
What's happened in Australia?
Well, Chris, it's a very rough session in the local market, as you were pointing out, down 2.1% as we head into lunch at 6,459 points. Now, this is the equivalent of around $39 or $40 billion wiped off the local market today. The losses and the selling is quite broad. If we look at the big four banks and the two big miners, which together make up a very large chunk of the ASX, we're seeing losses between 1.5% and 2.5%. As you mentioned, that this is us fitting well and truly into a global market sell-off, with Wall Street closing sharply lower after a seldom-seen recession indicator flashed red overnight. That is, that the 10-year Treasury yield dipped below the 2-year Treasury yield. That's something that hasn't happened since 2007, Chris, and we remember that that year stands out for all the wrong reasons.
Yeah, indeed. A lot of talk about recession, real worries around the globe. Obviously, unemployment figures will play into that here domestically. What are the latest figures released today?
Exactly right. Only half an hour ago, we did see the latest monthly job figures, and the unemployment rate remains steady at 5.2%. That was in line with market expectations, but the amount of job creation was strongly above expectations, with 41,000 new jobs created in the month of July. Now, also encouragingly is that most of those jobs, around 37,000, were full-time jobs, which is exactly what the market was hoping to see. Now, there is still a lot of spare capacity in the labour market, and these numbers remain well below long-term averages. The market's basically taking this in its stride. The Aussie dollar moved a little bit higher, and the ASX 200 has basically not really reacted to these jobs figures at all. Economists are saying that this doesn't really move the needle on what the Reserve Bank needs to do next and what everyone's expecting to do next, which is to continue to cut interest rates. Right now, the market's expecting another 25 basis points to be shaved off the cash rate in October, and maybe cutting again early next year, which would bring us to 0.5%, Chris, on the cash rate.
Yeah, it's extraordinary. Chris, give us your sense of the global consensus on what's unfolding. I notice there are more calls again in the US for interest rate cuts. Of course, there's the ongoing trade war between the US and China. What's happening in Hong Kong is going to only exacerbate tensions about all of that. Do we seriously worry that there is the prospect of a global recession?
Well, this particular recession indicator is quite interesting in that it hasn't been seen for some time, but there are a lot of people, I should say, out there who are saying that in a world post-quantitative easing and post-GFC, these sorts of indicators don't mean quite as much as they used to. Now, to your point about what's being said about all this, well, someone like Donald Trump certainly has a lot to say about this sort of stuff, and it continues to go down this never-before-seen path before, where this morning or overnight he tweeted that the Federal Reserve Chair, Jerome Powell, in the US was clueless. Now, this is something that we've never seen before, Chris, to have a president coming down so hard on the Federal Reserve Chair. Of course, what the president wants, is to see interest rate cut after interest rate cut, and possibly even the turning back on of the quantitative easing tap. But what he's really essentially doing is diverting attention away from the fact that the trade war that you mentioned between the US and China is also really hurting the US economy right now.